Okay, we're going to get started. First thing I'm going to talk about is the syllabus. The syllabus is basically this. It's the second half of the book, and if you already have the book, obviously don't buy it twice. It should work in this class also. My name is Mark Taylor, by the way. You can contact me. Um, I didn't put my school number on here because I'm never there. No one is. But this is my cell phone number. This is my email. And those are probably the best ways to contact me. Okay. Course description, you can read through that if you want. Page 2. Exams. After each chapter, we'll have an exam. And the exams are basically they'll follow what we did in class. And I do take late work. If it's more than a week late, I take off 10%. So if but you can turn it in throughout the quarter. But you lose 10%, but you get credit for most of it. The exams are 80% of your grade. Those are important to get in. You can miss a homework or two, and it's not that big a deal. If you miss an exam, it is a big deal. It can drop you a letter grade. So the exams are important. They're worth 80%. The stuff that we do online or in the webinars is going to be 20% of the grade, so that's 100% of the grade. That's automatically calculated in the Blackboard. Grading scale, which you've probably already seen. List of chapters. Now, these are the chapters that we're scheduled to teach, and we might not get to some of them, but we'll see. We should get to most of them. Some of these are more important than others. Okay, so as we go on, there may be ones that we'll eliminate, but we'll see. For right now, we'll go with this. Seems a little ambitious with going through the online, but yeah. All right, and then the rest of this is all policy stuff, which I'm sure you guys see on every syllabus. So there's not all that much else on that one. So the big thing here is the grades, and basically what we'll do is we'll have basically we have a handout. We have sometimes we'll have a practice exam, and then we'll have a test, and the test will follow what we did in class. So there's kind of a pattern to it. Okay. Well, this is the handout for chapter 15. You should already have this. I usually send these out in both Word and PDF formats. You can enter directly onto them. Some of them, this one will be a little bit more difficult to enter directly, but some of you can enter directly, or you can do it by hand. So, and then just take pictures of them. So, any way you want to get this to me, you can. Scan it, take pictures, however you want to do it. Type it up in Excel or in Word, that's fine too. Okay, well, we're going to start actually on the last page of this. And we're going to talk a little bit about just kind of some of the background stuff. So this is page 7 of the handout. So go to page 7, the last page. And we'll have something that looks like this. All right. So in the past, we usually start students out in accounting with a service business. And the reason we do that is this is the easiest. Because there's no inventory, or there's no inventory that's actually sold. So we start people on a service business just because it's the easiest. Next thing we go to is the merchandising business. This is a little more tricky. Buy and sell inventory. This is, you remember your LIFO, FIFO, and all that kind of stuff. That's merchandising. In this class, we are going to focus on manufacturing. So these two were the Accounting 210, and this is Accounting 211 for manufacturing. A little bit more difficult in that we are actually making something. So because we are making something, it adds that layer of complexity to it. Okay. Well, let's say that we're making a desk. It could be anything. It could be a chair. It could be a car. It could be. Let's say we're making a desk. And the question is, well, what do you need to make a desk? Well, you might. Well, first of all, the desk. Let's say the desk is made out of wood. We have wood, plastic, screws, glue, paint, other things. So those would be the direct materials. These are actually materials that we use to make the desk. Direct labor, these are the employees that are actually making the desks. Okay, now these first two direct materials and direct labor, these first two are fairly easy to track. And it's real easy to say, okay, we paid $15 for this piece of wood and it makes 3 desks. It's real easy to track those because they're direct. They go directly into it. And same with the labor. If we're paying someone $20 an hour and they make 5 desks, it's real easy to take that and see how much of it goes in there. These are both direct. So these first two are usually okay. This third one is a real problem. And it is a real problem because it is indirect costs. So overhead, also known as manufacturing overhead, factory overhead, or indirect costs. These are by definition indirect, the indirect costs. So yeah, the definition for overhead would be something that looks like this. Oops. So overhead is all of the indirect costs oops. Oh. That's necessary. So all of the indirect costs that go into production. Let me write that down. Ah. Now, it's ironic I keep messing up on that word because that is the word that's the problem. You know, what is necessary for production? Okay, I'm gonna give you some keywords that are overhead, and I'll give you some of the things that are definitely not overhead down below here. Okay, keywords that are overhead. If you see the word factory, it's most likely overhead. Manufacturing. It's overhead. The overhead. It's overhead. If you see indirect costs, it's most likely overhead. If you see plant, it's overhead. So those are some of the things you're going to see that are definitely overhead. Now, there are some things that are definitely not overhead, and those are administrative expenses. General office expense. And also advertising expense. Could be called selling expense. Marketing expense. Customer service. So these are all things that are not overhead. So whenever you're looking at something and trying to decide whether it goes into overhead or not, these are kind of the rules. And these are things that are not going to be in overhead. So I'm going to keep this separate so that it's kind of referred back to it when we go through these problems. Okay, so let's turn to page 1. And we're going to go through page 1 and 2 on this. Now, what I'm going to show this is using what we call T accounts. Now, you may have had T accounts before, maybe you didn't like them, and I don't blame you. But the way I'm going to show it to you is this is actually probably the easiest way to go through it. And the T accounts, basically, if you line them up like we have here, they kind of flow. And I want to show you something. See this direct materials, direct labor, and overhead? You'll notice that those are, the same ones, right? These are the same accounts. These are the same as those. So we're going to use these as our starting point. This is all the stuff that it takes to make something. We're going to start working on it. It's going to be in our work in process until we get it done. We're going to be, these are when you're assembling it. So if these are desks, this is when you're making the desks. Once you're done with the desks, you move into finished goods. And when you're done with that, you want to move them into cost of goods sold. So you kind of, this is kind of set up that the flow will go across like this. So what you end up with is things will come in on this side and out on the other side. In, out, and when it goes out, it goes to the next step. For instance, you take the piece of wood that you're going to cut up into dust. You're going to take it out of direct materials, out of the wood. You're going to put it into work in process. So it'll go from here, out of here, into work in process. Work in process, when you're done making it, you'll take it out of work in process and put it into finished goods. So finished goods, it's completed, you sell it, no longer have it anymore, so it's going to go out and go into cost of goods sold. So you kind of see that it goes across the page, sort of like it'll come in on the one side, and we'll say orange. It goes out on the other. And so it comes in here, and so forth. We'll go across the page. Okay, first thing we're going to do is we're going to take the beginning inventories, and there's going to be beginning inventories in direct materials, work in process, and finished goods. So these three will have beginning inventories, and those are here. We're going to start at the beginning, and we're going to end at the ending. And I'm looking for a marker. Unfortunately, all my highlighters are the same here. Well, let's try. Let's see what this pink one looks like. No, that's not good. Okay. So, we're going to take these beginning amounts. And put them into our different accounts. So the beginning direct materials was 20. Our beginning work in process was 65. And our beginning finished goods was 140. So that's what we started out with in those three accounts. So there's still, say, wood, 20. Things that we're still working on, there were 65, and finished goods, ones that we completed, are worth 140. Okay. smudgy. Okay, the ending, we're going to worry about those later. The ending, you do the ending at the end. So these ending ones will be at the end. So we're going to start over here now. Right-hand side. Okay, we have purchases of direct materials, 250. So those purchases, these are going to be for direct materials. You remember that from your previous ones that purchases is kind of a the term they use for inventory. So the inventory of direct materials. So that'll go into direct materials. Direct labor goes in direct labor. We didn't need me for that one. Okay, now these are kind of the trouble ones. We're going to go back to our thing here. So indirect labor, factory insurance, sales, and selling administrative expenses. Okay. First one, indirect labor. Is it overhead? Yes. Indirect. So you see indirect. So this is in overhead. I should write that out. Factory insurance expense. Factory. That's also overhead. Excuse me. Sales, not an overhead. Selling administrative expenses, definitely not overhead. Down here, selling expenses, administrative, those are not overhead. So these are not overhead. Okay, so these two that are overhead, those blue, how about? Ooh, first of all, I can't see them. Second of all, it's a little bit dark, but so the blue, those are going to be overhead. Okay, and I'll show you what we do with these later. It isn't that these don't exist; we're just not going to use them yet. So we'll talk about what these two are later. They're not going to be in this, but we're not saying they don't exist. They do exist, but they're just not part of what we're doing here. Okay, so now we're going to start moving stuff over. Okay, so let's take direct materials. And in direct materials, we have, oops, turn the calculator on first. Oops, get rid of that memory thing. Okay, 20 plus 250. $270. So we have 270 sitting in our direct materials. And if we didn't make anything, there still should be 270 sitting in those direct materials. We send somebody out to look at the direct materials. They come back and they say, oh, there's only 18 left in there. So if there's only 18 left, the question is, how much did we use? cardboard or something. Okay, so there's only 18 left. So if we had 270 and there's like 18 left, we must have used up all except 18. So if you just subtract those, so 270 minus the ending inventory. So minus inventories get subtracted. We'll put a little minus here. If you're an accounting major, don't do that. You don't put minuses in there, but for what we're doing, it's fine. So 270 minus 18. So we must use 252 in the work in process. And the rest of these, we're going to move over. So we're going to add these up. So we get 439 sitting in that account. Oops, can't see it. 439 sitting in that account. Our work in process has 70 left in it. So there's only 70 that is still not completed. So the rest of this must have been finished. So 439 minus 70. So 369 goes into finished goods. So this will be 509. We have 148 at the end. So 509 were the most we could sell. There's still 148 that are unsold. So the question is, how much we sold? We have sold. Okay. So going up here to the top, I think I'm going to eliminate this. But raw materials used, they use 252. Cost of goods manufactured is actually this number, 369, and the cost of goods sold is 361. So that is that. See if you can come up with that. Okay. Just to kind of round things out, let's go back up to here. We talked about the sales. This goes to the income statement. So it looked like this. I'll do it down here. In our income statement, we start out with our sales, 620. Oops, can't see it. We will subtract out our cost of goods sold. This is what it cost us to make them. This is our gross profit or gross margin. I'm not sure which one the book uses. Gross profit and gross margin are the same thing. And then we also have, so there's the sales. We have these selling administrative expenses. Now, they're not in overhead, but they did happen. They're not saying that these expenses weren't incurred. They were, but they just didn't go on the overhead. So down here we'll do minus. And that'll give us our income of 209. And so, again, this is, a reason for getting this cost of goods sold is that. So this tells us, I don't know what we're selling here, but whatever we're selling, we sold them for $620. It cost us $361 to make, and we had a profit on those items of $259. And that's just for the goods. These are the product good. Now down here we had other expenses, but as far as just making them, they cost $361 to make, and we had what's called gross margin or gross profit of $259. Okay, and again, you really don't have to know what, there are debits and credits in these T accounts, but you really don't even need to know that. If you notice when we went through here, we didn't talk about debits and credits. Okay, let's go ahead and do, this is probably the first time you've ever seen anything this wacky. Let's go to the next page. So this is page 2, problem 2. And everything's kind of the same. So these are over here will be the same as we've seen before. Purchases, again, the purchases are for direct materials. I'm sorry, it's left out a letter there. Direct labor, plant salary, is that overhead? We go to our, and keywords for overhead, plant. Plant manager salary, that's overhead. Factory. Overhead. Miscellaneous overhead. You probably don't need that one, but it's overhead. Sales. Not overhead. Selling administrative expenses, not overhead. Again, we're not saying they don't exist. They do exist. It's just that they don't go into overhead. These are not in our overhead. Okay. And again, we start, everything comes in on the one side and out on the other. You don't have to do this. It's just to kind of visually, whatever. Okay. So everything comes in, out, in, out, in. Okay. Well, just kind of follow along. You guys also do it on your own. That's fine too. Okay. So you'd be in there, And then you wait on the endings. We're not going to do the endings till the end. At this point, we jump over here to direct to purchases of direct materials. Direct labor. Oops, that's a 5. And you can't see it anyways. Direct labor. Overhead. We have 12. We have 34. And we have 11. Oops. And right now we're in the Zoom room. This is used to be my son's gaming room that we took over, and now I'm gonna move my stuff into I got a basement Zoom room that I'll be in next week hopefully. But my wife is a therapist, and so she does therapy. So this room is private. So managerial accounting is not private. We don't need to take up this room. Okay, so direct materials we have, I think it's 258. Better check. Make sure. One plus 177. Yep. 258. Okay, so 258. We tell someone go out there and count it up, and they come back and say, "Oh, there's only 86 left." So the 258, there's only 86 that is left. So we must have used the rest of it. So 258 minus 59, there's no inventory of direct labor. You don't ever see a big stack of direct labor. So this is just 90's a little sloppy there. Okay, over here we have a job for Mr. Calculator. 12 plus 34 plus 11. 57. So 57. Well, look how long I made my line. See the detail. Okay, so we moved everything out of these. So now it's all in work in process. So work in process, we have 90 plus 172 plus 50 plus 57. So there's 378 work in process, and if we didn't finish anything, there still should be 378 sitting in work in process. We tell someone to go out and count up. How much is it sitting in work in process? Oops, and I crossed it out. It's a 74. Made it worse. It's 74. So our work in process, there's 74. So out of 378, there's only 74 left. Sorry. 378, there's only 74 left. So subtract them. So 378 minus 74. Minus 74. 304. So again, now we moved them all the way over to finished goods. $304 plus 58, 362. I don't know why I'm doing that. I'm making those way too long. But we go up to our finished goods. We send someone out and say, tell us how much is still left. They say finished goods, there's 48 that are still there. So there's 48 that are unsold. Now these are unsold, so the rest of these must be sold. So 362 minus 48. So 314 is our cost of goods sold. Okay, so filling in these up here, direct materials used, we used 172. Cost of goods manufactured would be this number. Cost of goods sold would be 314. I'll tell you what, on the test, I'll put this on as extra credit. Total manufacturing cost for the period. I'll show you how to calculate that one. That one is basically it's basically what we used for direct materials, direct labor, and overhead. Those are what go into this up here. So we're going to take 172 plus 59 plus 57. Let's see what that equals. Plus 59 plus 7 is 288. So that's those. And again, now on the 10, I'm going to read that. It's 288. I think my pen here is going to go down. So on the test, this will be extra credit. It'll be extra credit on the test. So these three will be required. If you get B, the extra credit, you don't have to do it. But if you do it, you get extra credit. Income statement. We have sales of 425. We have cost of goods sold. Wrong number. 425 minus 314. I think that's 111. So 425 minus 314. So the gross margin. We have our selling and administrative expense. The saving one would abbreviate that. And so our income is -9. So this income is really a loss. 9. And so that's the income statement. So this is, you know, from this up here, this, you can't, it's hard to look at this and know how much money you made or lost. In this case, you lost money, but you'd never know that by looking at this. So down here, it tells us what, you know, what actually happened. They made money on the goods they sold, but their selling administrative expenses they didn't cover all of them. They didn't want to lose money, but that's what happened. Okay. Well, that's it for pages 1 and 2. We're going to stop right there. So don't do anything with 3 or 4. You don't have to do anything with anything else. So this is just for this week. You get started on the handout for chapter 15, and this video will be up shortly, and you'll be able to see it on in Blackboard. Okay, that's it. Goodbye. Oh, you want to see the doggy? Here's the doggy again. Here's the doggy dancing. So that's how you know the video is over, when the doggy starts dancing. Dancing doggy.